Hi everyone, welcome back to our channel. Today with me Ainin, we are doing a student style interview, very chill, very simple. We'll be talking about Malaysia Budget 2024 and Budget 2025. But don't worry, we're not covering everything. Did you know what is budget? A budget is essentially a financial plan that shows how the government expects to collect money and how it will spend it. This is very important because it ensures that resources are used wisely and that government spending aligns with the country's priorities. The Malaysian budget is presented once a year, usually in October, by the Minister of Finance in Parliament. It outlines the government revenue, expenditure and tax measures, showing how the government plans to collect and spend money in the coming year. The budget also includes tax policies, incentives, and relief that directly affect individuals and businesses. Overall, it plays a key role in shaping the economy and improving the welfare of the people. Each year, a budget has a theme. The theme highlights the government's priorities. For example, Budget 2024 was economic reforms, empowering the people. Budget 2025 was Economy Madani, a prosperous nation for the well-being of the rakyat. Alright, now we know what a budget is. Let's jump straight to our interview. And now, let's search for some students. Aha! Hi Anna, can you explain what a trust is like?
So basically, a trust is when someone giving their asset like property or money to a trustee and the trustee manage it for the benefit of other people, usually family members. This is very common in inheritance planning.
Anna, earlier we talked about trusts, but when we looked at Budget 2024 and 2025, we noticed that trusts weren't mentioned directly. So, how do trusts actually relate to the budget?
That's a really good question. You are right. Budget 2024 and Budget 2025 do not specifically mention trust or trustee. However, trusts are closely connected to estate and inheritance planning, which is covered in the budget. In Budget 2024, the government introduced a fixed stamp duty of RM10 for the transfer of inheritance property when an eligible beneficiary renounces their right in favour of another eligible beneficiary under a will, faraid, or the Distribution Act 1958. Before this, the stamp duty will be based on ad valorem duty of 1 to 4%. Will be charged.
Oh, so even though it's not directly about trust, it still affects estate planning?
Exactly. Trusts are commonly used as a tool for estate planning to manage and distribute assets efficiently. When the government reduced stamp duty cost for inheritance-related transfer, it indirectly supports structured estate planning, including arrangements that may involve trusts.
That makes sense. So, what's the difference between Budget 2024 and Budget 2025 for trusts?
The key differences is that Budget 2024 introduced the stamp duty reform related to inheritance transfer, while Budget 2025 did not introduce any new change and continued the same treatment. So, even though trusts are not mentioned explicitly in either budget, the continuation of this policy in Budget 2025 provides certainty and stability for long-term estate planning, where trusts are often used.
Thank you, Anna, for your time. And now, let's find another student. Alright, now we have Aina here. So, let's move on to estate under administration. Aina, what does that mean?
Okay, so estate under administration is basically the stage after someone passed away, where their assets are carefully managed by an executor or administrator before being distributed to the beneficiaries. It's not just about money, it's about making sure that all the deceased person property like house, land, bank accounts or investment is handled properly and transferred according to legal rules. These include transfer under a will, faraid, or the Distribution Act 1958. The goal is to make the process fair, accurate and legally compliant so everyone involved know what to expect.
Oh, so it's more about the process.
Exactly. That's why Budget 2024 was so important. It highlighted the need for a more efficient and people-centered approach when handling inheritance matters. Instead of focusing only on government revenue, it encouraged smoother administration of of inheritance property, especially for transfer that follow existing legal framework. This reduce delays, minimize legal complication, and make the process less stressful for families who are often dealing with emotional challenge at the same time.
Oh, that makes sense.
Yes, and this approach also aligns with the Malaysian Manhadi principle, which focus on the well-being of the rakyat by simplifying how inheritance property is transferred from the estate administration to eligible beneficiaries. Budget 2024 aims to protect families, save time and ensure fairness in the distribution process. Family can now handle estate matters with more clarity and confidence.
So, what about budget 2025?
In Budget 2025, there were any new changes for estate under administration. The government continued the same framework introduced in 2024, which is actually positive because consistency helps family plan better and avoid confusions. So, in essence, Budget 2024 introduced a more efficient and compassionate approach, and Budget 2025 keep it in place, giving stability and certainty for everyone involved.
Oh, alright. Thank you, Aina, for your time. Bye. And now, let's move on to another student. And now, we are with Aisha here. Okay, now, let's talk about REITs. Aisha, people always say REIT sounds complicated. Can you explain it simply?
I know, right? Rates do sound a bit scary at first, but actually, they're not that hard to understand. Basically, a rate which stands for Real Estate Investment Trust is like a way for people to invest in big properties such as shopping malls, office buildings, hotels, or even warehouse without having to buy the building themselves. Instead of owning the whole property, you just buy some units in the rate and then you get a share of the income that comes from the rent. So basically, it's a way to invest in real estate without needing a huge amount of money, and you can still earn from the profits. So in Budget 2024, the government's made a change to the tax exemption for REIT fund management services. Before, it was 100% tax exempt, which meant fund managers didn't have to pay any tax at all on the income they earned. But starting from year assessment 2024 until 2027, the exemption was reduced to 60%, which means they still get a tax break, but not as much as before. And this applies to both conventional rates and Sharia compliance rates. So it covers all type of rates in Malaysia.
Oh, okay. So it's still exempted, just not fully, right?
Yep, exactly. And then in Budget 2025, there were not any new changes for rates. The government just kept the same 60% tax exemption that they introduced in 2024. So basically, the main difference is that Budget 2024 reduced the tax exemption and Budget 2025 just maintained it without adding anything new.
Oh, I see. So budget 2024 reduced. So it's still a good option for people who want to invest.
Totally. Rates are still a simple and practical way for people to invest in property and earn rental income. Even if you don't have the money to buy a building on your own, the government's tax exemption helps make it more attractive. And even though it was reduced in 2024, it's still a nice incentive. So, if someone wants to earn income from property without all the hassle of managing it themselves, rates are definitely worth considering.
Alright, thank you Aisha for your time. Alright, now let's look for the last student. Okay, now we are with
Hi.
Hi Mai. So let's talk about investment holding companies. Mai, what exactly is an IHC?
Okay, so an investment holding company or IHC is basically a company that mainly exists to hold investments like shares in other companies or even properties. Instead of running a normal business day to day, you can think of it as a company that owns things that make money for it, but it doesn't produce goods or offer services like a regular company does. Its main job is to just hold and manage investments. Now, in Budget 2024, the government introduced something called a capital gains tax for companies that sells unlisted shares. This means that if an IHC decides to sell shares in private companies that are not listed on the stock market, it might have to pay tax on the profit it makes from the sale. So, companies that buy and sell investments often have to be careful about this new tax. However, if an IHC simply keeps its investment for a long time and does not sell the shares, it is usually not affected by this tax.
Okay, so long-term holding companies are mostly fine.
Exactly. Companies that hold their investments for a long time are less affected because the capital gain tax only applies when the shares are actually sold. So, if the company is just holding the shares and not selling them, it does not have to pay this tax yet.
Okay, I got it. And what about Budget 2025?
Budget 2025, the focus changed from companies to individuals. The government introduced a 2% dividend tax for people who earn more than 100,000 ringgit in dividend income. This means that if someone gets a large amount of money from dividends, which is basically a share of a company's profits, they now have to pay a small tax on the amount above 100,000 ringgit. So, the government shifted attention from taxing companies to taxing people who earn high dividend income.
So the focus is completely different, right?
Exactly. Budget 2024 focus on companies paying tax on capital gains when they sell unlisted shares, while Budget 2025 focus on individual paying tax on dividend income above 100,000. Both are about investment income, but one is at the company level and other is at the individual level. It is important to understand both because they affect different types of investors in different ways.
Alright, so that's all from us. Thank you so much, Mai, for your time. Really appreciate it. Alright, everyone. To conclude our discussion on Budget 2024 and 2025, we can see that both budgets play important roles in shaping Malaysia's financial and economic direction. For Budget 2024, they focused on introducing key reforms such as improving estate planning processes, adjusting tax incentives, and introducing new taxes related to investment. Meanwhile, Budget 2025 focused on maintaining these policies, providing stability, certainty, and continuity for individuals, family, and investors. Overall, this budget shows how government financial planning goes beyond numbers as it directly affects people's lives, investment, and future planning. That's all for our student style interview on Malaysia's budget 2024 and 2025. Thank you so much for watching, and we will see you in the next video.